When it comes to Apple and China, we know over the last few years the growth has not been there.
The overall narrative seems to be that Apple loses position and Huawei gains. Is that the right one to make?
Oh yeah, but that's because over the last 12 months we have seen a massive upgrade in Huawei phones. But there's a reason for it, because Huawei hadn't, launched a phone for several years. So the people who had the older phones were going out to go out and refresh that or buy the newer ones. Whereas, as we know, for Apple iPhones, we are seeing an elongation in the refresh cycle because the product's been, a far more reliable product, as well as it's expensive. So people are keeping it longer. So that's really has been the biggest issue for Apple for over the last, I would say, 2.5 years or so.
Apple just lost $1 trillion in market value. That's more than the GDP of countries like the Netherlands or Saudi Arabia's oil revenue in a year. How does the world's most valuable company lose that much, that fast? Apple has always been the poster child of unstoppable growth. Think about it. In 2018, Apple became the first US company ever to hit $1 trillion market valuation. Just 2 years later, it doubled that number, racing past $2 trillion in August of 2020. By early 2022, Apple briefly touched $3 trillion, a milestone no other company had ever achieved. This wasn't just luck. Apple's iPhone dominated the smartphone world, capturing nearly 20% of the global market share, while pulling in over half of the industry's total profits. Add to the ecosystem AirPods, Apple Watch, MacBooks, and the Apple Store, all interconnected. By 2021, Apple services alone were generating nearly $70 billion in annual revenue, making it clear that the company was no longer just about hardware. So how did the world's most admired brand suddenly lose $1 trillion in value? The slide began in 2022. Apple stock, which has soared for over a decade, faced brutal headwinds. The Nasdaq crashed as interest rates climbed, inflation spiked, and global investors pulled away from tech. Apple was hit hard. In less than a year, its valuation sank below $2 trillion, wiping out over $1 trillion in shareholder value. But the shock wasn't just about the markets. Investors were suddenly questioning Apple's ability to keep its growth story alive. iPhone sales were slowing in key regions, especially in China. Supply chain disruptions during COVID-19 added to the pressure, leaving Apple unable to meet demand during the holiday season. And then came the geopolitical angle. Rising US-China tensions made Apple's dependence on Chinese manufacturing look like a dangerous vulnerability. Analysts began asking, could Apple's entire empire built on the iPhone finally be showing cracks? For years, Apple could do no wrong, but suddenly, the same story that made it unstoppable, the iPhone, China, and its global dominance, is exactly what puts $1 trillion at risk. This sets the stage for one of the biggest financial shocks in corporate history, not just because of the size of the loss, but because of what it revealed about Apple's future. To understand Apple's $1 trillion collapse, we need to look at one word: China. More than 90% of iPhones are assembled in China, with Foxconn's massive factories in places like Zhengzhou, employing hundreds of thousands of workers. This made production cheap, fast, and efficient, but the dependence became a liability the moment the global landscape shifted. COVID-19 lockdowns in 2022 exposed this vulnerability most harshly. Foxconn's iPhone City faced worker protests and shutdowns, leaving Apple unable to ship millions of devices during peak holiday demand. Analysts estimated the disruptions alone cost Apple up to $8 billion in revenue that quarter. At the same time, China, Apple's biggest international market after the US, began to cool. iPhone sales slipped as local giants like Huawei and Xiaomi fought back with cheaper models and nationalistic appeal. In fact, by late 2023, reports showed that Huawei's comeback was directly eating into Apple's market share in China, forcing investors to rethink Apple's growth potential in Asia. But the pressure didn't stop there. Geopolitics turned into a ticking time bomb. As US-China tensions escalated, Washington imposed tariffs and restrictions on Chinese tech, while Beijing hinted at retaliation. Apple suddenly looked like collateral damage in a much bigger fight. Think about this. Apple isn't just dependent on China for production. It also earns roughly 20% of its revenue from Chinese consumers. So when talk of potential bans, tariffs, or stricter regulations surfaced, Wall Street panicked. If China decided to push Apple out or even restrict iPhone sales more aggressively, billions in revenue could vanish overnight. And then there's the iPhone itself. For more than 15 years, the iPhone has been Apple's golden goose, accounting for nearly half of the company's total revenue. But growth has slowed. Global smartphone sales fell to the lowest level in nearly a decade, and even Apple couldn't escape the slump. Without a breakthrough new product, no new iPhone moment, Apple's heavy reliance on one product began to look unsustainable. Apple built the most profitable product in history. But when that product slows down and when your entire supply chain depends on a rival superpower, Wall Street doesn't just notice, it punishes you. By early 2023, all of these factors, supply chain crisis, slowing iPhone sales, and geopolitical risk collided. And that's what turned Apple's trillion-dollar loss from a temporary dip into a wake-up call about the company's future. When Apple lost over $1 trillion in market value, many investors asked the same question: is this Tim Cook's fault? Now let's be clear, Cook isn't Steve Jobs. He's not the visionary who introduced the iPhone, the iPad, or the iPod. Instead, Cook is an operational genius, the man who streamlined Apple's supply chain and turned it into a profit machine. Under his leadership, Apple became the first company to hit $3 trillion in market capitalization in January of 2022. That's a staggering achievement. But here's the problem. Cook's strengths are also Apple's weaknesses. He doubled down on efficiency, which meant leaning even harder on China. That worked when the world was stable, but when the pandemic, geopolitics, and slowing smartphone demand hit, the cracks showed. Apple suddenly looked overexposed. Tim Cook helped Apple reach heights no company had ever seen. But Wall Street does not reward yesterday's victory, it punishes today's risks. And Wall Street has punished Apple. After peaking at $3 trillion in 2022, the company shed more than $1 trillion in value as confidence wavered. Analysts called it a correction, a harsh reminder that even the world's most valuable company isn't invincible. But here's where it gets interesting. Apple isn't just sitting still. Cook and his team are making moves. They are diversifying production, shifting factories to India and Vietnam to reduce dependence on China. They are also pushing into new markets like wearables, services, and even mixed reality with the Vision Pro headsets. Still, skeptics aren't convinced. Services like iCloud and Apple Music are growing. Yes, but they can't yet replace the scale of iPhone sales. And products like the Vision Pro are too niche to become the next iPhone, at least for now. The real test is whether Apple can reinvent itself, or is the $1 trillion loss a signal that Apple has peaked? Here is the kicker. Apple's brand is still one of the most trusted in the world. It has over 1.2 billion active iPhone users, a loyal customer base any rival could kill for. That's why some investors still call Apple the safest long-term bet in tech. But the $1 trillion drop is proof that even giants tumble. Apple's story isn't over, but losing $1 trillion should remind us no company, no matter how powerful, is untouchable.